The future of tech came a lot quicker than I thought. Looking at these Apple Vision Pro headsets, these VR, AR headsets, you could do so many amazing things on this device to where you can actually make a case where you're more productive at work and you can have 4 or 5 windows open on your headset and you can multitask. You can have different apps running. You could be a lot more efficient at work. You can make that case. And if you can, this $3,500 price tag, if you're in the 37% brackets, gonna be saving you 13, $1,400 in tax, and you get a cool little tech device, but there's some rules regarding what constitutes as a business expense.
Ultimately, you need to actually use it for business. You need to have a belief, original economic intent when you buy those that this is good for my business for XYZ. Then you have to use it in business and you have to use it predominantly in business. Right now, it used to be cell phones when we first started deducting cell phone expenses in the early 2000s. The IRS said we had to track business versus personal use on them. There were people actually tracking their calls. And I remember working with clients and they said, all right, how much of your cell phone is business use? And they tracked their calls and 30% business use. We could deduct their. Over time, the IRS relented and said, all right, you know what? Cell phones are so commonplace now. It's impossible for most people to do business without their cell phone. No more prorating. You can go ahead and deduct the whole thing. They haven't yet done that for home office internet, but maybe 10 years from now, Kevin, the IRS will agree. I'm looking for that pronouncement, that revenue statement or ruling that comes out in the year 2030. These Vision Pros, you need them for business. Everyone has them. So deduct the whole thing. But in all honesty, if you buy them and you're using them for the majority for business, the substantial use of them is for business. I would argue they are definitely a deductible expense.
And you can use them to give it to your employees. Just know that if you give your employees any sort of compensation outside of money, you're going to have to add it to their W-2. So if one of your sales guys or someone on your team is really just doing really well and you want to give them some Apple Vision Pros and say, "Hey, it's going to help you in your business even further." Yeah, that's deductible, but that's also taxable to the employee unless it's going to be property of the business. If you buy 10 Apple Vision Pros and the employees have access to them, but they can't take it home, and it is really staying at the core business, then it's not taxable to the employees. It's just like normal equipment. But if you give these, just like with any gift, any cell phone or anything, if you give an employee some sort of benefit, there's some sort of tax weight to that too for them too. So be smart with how you transact giving these to your employees. You don't want to create a tax burden.
Yeah, that brings up an interesting topic. So we're allowed to give this year $17,000 tax-free gift to an individual. I could give if I had the money, I could give 100 people $17,000 each. They don't pay tax, I don't pay tax. The IRS is held, and there's long case history on this. Can an employer truly give a gift to an employee? It's possible, but very hard to establish it's truly a gift. There can be no quid pro quo when you give a gift to someone for it to truly be taxed as a gift. You can't say, I'm giving you this and I still expect you to work next week. That doesn't fly with the IRS. The IRS has held a very, very heavy burden on employers wishing to gift stuff to their employees. Generally, it's compensation and it's taxable. You can always gross it up. We gave AirPod Pros to all of our staff, what, 2 years ago, Kevin?
Yeah.
And what we did, I think they were like $349.99. So we put that on their W-2. We grossed it up. So we actually gave them enough money to cover the taxes. So nothing came out of pocket. But for each $349 AirPod gift they got, they recognized like 420 bucks of income on their tax return. But we paid the taxes for them. So just be careful with that.